Everybody, this is Evan Carthy from evancarthy.com, and I want to show you a trade setup that I'm using. It's just using a Pitchfork and Fibonacci levels and also a semaphore. So all free trading indicators or techniques for pretty much whatever platform you should be using. I'm using TradingView for it right here. TradingView's alright, has its pros and cons, but works for me. So how it works is for the semaphores are just these dots right here. See these dots between these yellow and orange dots? Here it is up here, semaphore. So if you're in TradingView, just search semaphore, S-E-M-A-F-O-R. And I just leave it at whatever the default settings is. You can see the large, medium, and then small. I don't use the small ones. They create more dots in there. You can, but the red ones and orange ones work for me. The red ones are the largest, and so to have those, you have to have an orange one to fit into a red one. So that's why you can use like orange, red, and red like that for them. So we just look for the last three that are on the chart, and here we can see the last three right here. And so all you do is you take your pitchfork, and it's just standard pitchfork, draw it on the last three semaphores, and the pitchfork levels we're using is the median line, obviously, is just the red line right there that runs down the middle, the 1.146 Fibonacci extension level, which is the green line, and the 1.618, which is the yellow line for right there. So what we're doing is we're looking for price to move away from the last semaphore level and close above either the 1.146 level or the 1.618 level, because those are both opportunities to trade. So once you get a close above either one of those levels, see here's the 1.146, this creates the signal bar. So that means now we're looking for an entry, and how we get the entry is we're looking for one of the future bars to come and hit the line. So in this instance right here, you can see there's the signal bar, price closed above the 1.146, and the next bar right here is the entry bar because price hit the level. So I'll just draw a black line where it hit the green 1.146 line. So that's the entry. So once you get that, then you just take your Fibonacci drawing tool, go down to the bottom all the way up to wherever the previous high was, which is going to be that bar right there. And the levels we use for the Fibonacci retracement and extension, I just have the 0 and the 100% checked. Use the 50%, 61.8. It's not quite 50, I think. Yeah, I forgot the reason why it wasn't quite 50. It's like the square root of some number, but close enough. And then for the extension levels, the 1.146 and 1.414 each direction. So that's going to be positive way. Here's a negative way. And when you go the negative way here using this tool for the Fibonacci level, you have to subtract a 1 from it to make it even for some reason. So that's that. So those are going to be your target levels. So we have the signal bar right there. There's the entry bar. So the original exit is going to be, I'll drop box, make it easier, is going to be the 1.146 line right here. As you can see that right there. So in this trade was a really easy trade. You got signal bar, very next bar, price hit it, had hardly any retracement down, goes on up there and hits a target for a nice little 7.5 point gain here in the S&P 500 for that move. Now we still have another setup because it actually came and confirmed on the 1.618 level. So we see there's our signal bar right here. You can see that's the one that closed above the yellow line, which is the 1.618. So then all we do is we wait for price to come back and hit the yellow line, which is this bar. There's your entry bar right there. So there's the entry level right there. So the exit would be all the way up here at 45.56, and if you got in right there and say it did go up there and hit that, that's a 16.5 point gain. But this isn't, unfortunately, the way I do the setup. It did not happen because there are some considerations to be in place, because there are other entry levels if price continues to move against you, because you just have to be safe for it. Now in this setup, it obviously did work out, even though we had that retracement, came back up and hit the target. But from doing this back testing a whole lot, there are some times when price hits certain levels that it will only go up a certain way higher and then come back in retracement and never goes back up there and hits that. So to be safe, what I do is when price goes and hits the median line, which is the red line right there, I move the exit from originally being right here at the 1.146 level to the entry level. So there would have been your second entry, and then you move your exit to right there. So for this one, still a really nice gain. You know, you're looking at 18 points right there. So this is why on the first entry, I usually do not get in on the first entry unless it's a real tight setup, something like that, or I just, for whatever reason, just feel like price is going to continue in that direction, you know, moving higher for it, no big deal. We'll go ahead and do that. But for the most part, I do not get in right there. Usually the first entry I would look to get in is around the 50% Fibonacci retracement level, which I'll explain why later here in a little bit. But for this instance, you can see here's a second entry level right down here where price hit the median line. So again, the exit moves from the 1.146 to the entry, which is the black line right there. And that trade setup would have been a really nice one there as well. Let me see here. Okay, here is another one here on the S&P 500 because I want to show all the different ones. These are using the latest red semaphores, because you can use 3 red semaphores for them. You just can't use like a red, and then go down here and you like use this orange, because you want to use the 3 latest ones. So say like that was currently where we were looking at that point. There's the latest red, and latest red right there. So using those 3 points, we just draw the pitchfork on them, and we're just waiting for price to go up there and break it without a red one forming before price closes above it. So we can see never quite broke it. Okay, it broke it right there. But what we're just going to focus on for this one is the 1.618 level rather than doing both of them this time. So there we have a break right here of the 1.618 right here. I guess if you squint hard enough, that could be considered one, but I think what I did for this trade, which probably would have been a safer trade, but for this trade we just did that one right there as the close above it. So then we're waiting for price to come back down and hit the yellow line. There it is right there. There it is right there. And I think the reason why is because I used, for this one I used the 15-minute chart rather than the 5-minute chart. So that's why for that one, in the 5-minute chart, it closed above it. For a 15-minute chart, it did not. So there we go. Use that one. So we're just waiting for price to come back down, because that's the signal bar right there, closed above it. Now we're waiting for price to come back down and hit it. This one came close, never quite did, but didn't happen until right there is where it got hit. So we just draw the Fibonacci levels, and the original exit is going to be, there's your entry right here. There's the exit right there. I'll just draw. That's going to be the exit. So obviously, this trade did not happen where price went up, 30 points from that entry level and hit them, but that's what happens sometimes. Price continued to go down. Here it comes, hits the midline, so the exit moves from that Fibonacci extension level to the black line right there. But as you can see, price continues to move lower. So there is one more entry level that we have to consider. So I'm going to take the pitchfork away because we don't need this anymore, but that's where the second entry level would be, and that's where the second exit would have been right there. Or excuse me, that's where the exit would have moved to. So when the price continues to move down and hits the Fibonacci extension level the other way, way down over here, like it did. See right down here in this box, there's between the 1.146 and 1.44. The 1.44, for whatever reason, seems to be like the lowest. It will go. Sometimes it'll break out for a second, but then pop right back in for moving up. So that's why I put it. That's why I put it on there to know if I do want to get in for some extreme profits and get in down here at this level. But it obviously doesn't always go down there and hit it, just because it goes into this area right here. But so price went down and hit this extension level the other way. So for this one, we moved the exit one more time for the last time. And before, I normally had kept it up here at the extension level, but I did see a couple times where price did not, after it hit the Fibonacci extension level the other way, like right down here, it did not always go back up there and hit the original entry level where we had it when like price hit the pitchfork midline. So we go down here, there's your next entry right there, and then we move the exit down to the 50% line. You see there's the Fibonacci retracement level. Here's the 50% line. So we move the exit down there. So that is the main reason why I do not get in when we have that original entry level, which would have been, let me just show you here again real quick. There's the original entry level. Now it still would have been, a good sized win for it, because say you get in right here, and this is the I guess I took the Fibonacci off. Okay, there we go. There's the original entry, and then say you would have lost on that one 7 points, but the drawdown for this would have been 58 points. So that's not fun. So the earliest I normally get in is And I guess I'm a day trader, but also a swing trader. Probably the majority of my trades take more than a day. Usually take a couple days to get it. And so with the account size that I have to make sure that when I keep these trades overnight, you have to make sure you have enough in your account to cover the margin. So that's one thing to consider as far as the entry levels going in. That's another reason why I don't get in right here, because not only do you have to have enough to cover the margin for that contract, you have to have enough to cover the drawdown. Plus, if you get in at any other levels, you have to cover that for the margin as well. So normally the earliest I get in is the 50% level, which is this level right here, and then the second entry would be all the way down here at the 1.146. So drawdowns aren't a thing for me. I've done this for years. It's just the way I trade, what I'm used to. You may not like that at all. You like having tight stops, and that's perfectly fine. But the way I trade, the way I trade is I know that I cannot predict where the market is going to turn. So I've learned to just look for points where I think is a good turning point, but if it does go lower, I have some backup procedures in place to get in at even better levels and then move my exits. And that's what kind of like the genesis of this trading style is right here. So price came back down, hit and I'm going to remove the pitchfork. We don't need that anymore. Price came back down, hit the extension level down here. So when it does that, we move the exit to the 50% level right there. So from that one, it did go slightly lower into it, but eventually came back up and hit that. So from that level, getting in right around there to up there, it's 39, about 39 points or so. So that's why I normally get in the 50%, because also what it does is a lot of times if price is going to continue its move up, it will have the retracement down here in between the 50 and 61.8%, and it'll boost up, bam, and give you a nice win right there. But if it doesn't and continues to move on even lower, down here that one, I'll get in right there and just have the X right there. So for that entry, slight loss, no big deal, but this one's a big gain right there. And so that is the third way it ends. And let me show you two more examples right here. One is in the Russell, and then the last one will be in the NASDAQ. And I'll show you a third one in Bitcoin that's currently live right now, because what I like having trade styles that work in every single market and every single time frame for it. So using the 5-minute chart, going here on the Russell, using that semaphore, that semaphore, that semaphore, when you see price came back down, here we go. Here's the signal bar right there. It closed below the 1.146 line right there, but never closed below the 1.618. So we're not looking for that level to trade from. So it closed below the 1.146. Here's the entry right here. There's an entry bar. See signal bar, close below it. There's an entry bar right there, and then price continued to move up. So I'm sorry. So the original exit would have been down here at the 1.146 level, but price continued to move up. So once it hits the midline right there, there's your other potential entry area, and then it moves the exit to the entry level right there. And as you can see from this setup, price continued to move up, never went the other way and hit the extension level the other way. So we don't move the exit to the 50% line. We keep it right down here. And if we just keep scrolling over, eventually, look at that, price came back down, ticked off that line right there. I actually went below it just to make sure you get filled right there. And pretty much how I have all my exit, I don't keep them right on the line. I would have my exits slightly, above it. If you're looking at, let's find, yeah, slightly. Oh, they're all black. Let me change this something else. Wait. All right, let's try this one. Okay, that one is too. Change it to purple. I would have my exit slightly, above it if I'm looking to get filled from the short side, or slightly below it if I'm looking for price coming back up to get it filled that way. So I don't have my exit like for this one, the exit was this black line, so we're looking for price coming back down to hit it. I wouldn't have my exit straight on it. I always get out a little bit sooner just to ensure I get out, because I have seen it before, come super close and either just misses it by a tick or two and takes off, or it just goes down there, barely kisses it and then pushes off. So just to make sure you can get out of it, no questions asked, I recommend not having your exit right on the exit level. Just have it a little bit, so instead of you're looking for 100% of the trade, take 92% of the trade, just to ensure you can get out, because I've had it before where I missed the exit, missed it literally by a tick, and takes off, and you miss out on it and things like that. So just have it. That's what I recommend. That's the way I do it, is having your exit slightly off wherever your hard exit level is right there. But as you can see, price came down there, hit barely, hit it, and then it's taken off the other way, and there it's going off the other way. So lastly, let me show you the well, I'm going to show you Bitcoin here. That's going to take a second. But let me show NASDAQ as the reason why when it hits the extension level, we get out at the 50%. So using these three semaphores that I highlighted, so it's easy to see. Right here, using 5-minute chart. Okay, there's 1, 2, 3. We just draw the pitchfork. There we go. We'll use the 61.8 level because I can see price hit above the 1.146. Hit above. Let's see, closed above it. Went down right there. Came pretty close to hitting it, but it still would have done the same thing as you see. It hits 50% right there. So we'll just use the 1.618. So we go close above it. There's your signal bar right there, closed above it, so we're waiting for it to come down and hit it. There we go, that bar hit it. So there's your entry bar right there. We draw the Fibonacci retracement levels. Here's your exit right up here at the orange line, and as you can see, it never came down and gets hit. Price comes back down, hits the midline, which is also happens to be right where the Fibonacci extension level the other way is. So when it hits the midline, the exit moves right up here. There's the exit, moves to the entry level, moves right there. But as you can see, price, it also went into, I'm going to take the pitchfork away because we'll need that more, because the price went and hit the opposite direction of the, of the extension level. So again, once it hits the opposite way of the 1.146, we move the exit to the 50%, just at the 50%, and that's it right there, that green line. So again, I would have had my exit probably like something like that purple line right there. That's probably where my exit would have been. That's the hard exit right there. Maybe even slightly a little bit lower, something like that, just to ensure you get filled and get out. So there's hard exit. There's my exit right there. So this would have been, the third potential entry. You have your original entry. I guess I'll go ahead and put that back in. I'll just draw a little line. So there's the original entry right there. Here is the potential second entry, and then there is the third entry just right next to it right there. So those are the potential entry areas. And again, this is why I don't normally get in at the first entry level. So price came back down. There's a second entry, which we'll just delete that since it's so close to the extension level. And there's the extension level entry right there. So as you can see, price came back up, and I would have thought it would have filled this because you can see right here, you also have a gap. You had this huge gap from right there to right there, and I thought it would come up and fill that, but it did not. It went back in it a little ways, kissed off the 50%, and then sold off. So if, had the exit at the original entry right here, which I used to have it thinking that was going to be it. It did not get it, and then as you can see, price has just sold off down ever since until today where it started to come back some. So rather than risk that huge drawdown for it, just get out at the 50%. Once price hits the extension 1.146 going the other way, have your exit be at the 50% right here, which is what I do. Goes off. It still makes a very nice trade for it, and this is another reason why the first time, my first entry that I look to getting in is the 50% level. So if it does go down and hits the extension level, you just take it for a slight loss right here, where you get in for your second time right here, and you have a big gain. So more than makes up for it, rather than having your first entry get right here, and then you would have to have your second entry where the median line is for when you have to move back down. So that's the reason why I do that. And then let me show you a live trade that is live right now, which is Bitcoin. So using the hourly chart, using semaphore 1, 2, 3, we can see here is the signal bar right here for both the 1.146 and 1.618. Price closed above it. Very next one bar, price hit it right there. The very next one, that's the entry right there. So we'll just draw that. Then price came back down, which, okay, I'll just go over it. So there's the entry, and here is the original exit we're looking for, is all the way up there at about 32,505. But obviously price didn't do that. Came back down, hit the midline. So we move the exit, or we'll just draw this right here. There's the second entry, and that moves the exit from being the 1.146 level to right here, which is about 31,835. But then as you can see, price continued to move lower, so I'm going to take the pitchfork off of it just to make it a little bit clearer. And then price came down here and hit the Fibonacci level going the other way right here. So once it did that, then we take it and we move the exit to the 50% level right there. Right there, there's the 50% level, drawing it from originally, from right there, from where it was. And again, my exit, see, there's 50% level, the green bar right there, the top one. My exit level, if I was in it, would be, slightly lower than it. So say instead of the hard exit being at 31,050, I'm exit at 30,995, something like that. But we'll just draw that back up there to highlight it because that's the hard exit right there for it. And so price has been just waffling around down here between the 1.146 and 1.414. You see there's 1.44 being support for it. And then the other day it looked like it's fixing to, the bottom is fixing to fall out because when this bar was going on, this is just straight solid red bar going down. But look right here, found support and looked like it's going to take off. Never quite did. And then today it's just still been on there. So we're still looking at price for Bitcoin to going up to about 31,050 for it right up here. And as you can see, for about the past 10 to 14 days, it's just been collecting contracts, building up support, and so I'm expecting a pop off for this thing to go up from the 29,000s, mid to low 29,000s up to 31,000 for Bitcoin. So anyways, that is that Pitchfork trade that I'm using trading right now. I really like it, really enjoy it, because what I look for is like a set parameters that things have to be hit in order for a trade to be established. And then I look for set parameters as far as entry levels and more importantly the exit levels for it. And so this provides all of that. I also enjoy pitchforks and I love Fibonacci retracement extension levels. So this trading style combines all that together. So you kind of know where your potential exit levels are even before you get in trade. In my opinion, that is one of the most important things you can do for your trading, is to know where you are getting out of a trade before you even potentially get in a trade. So anyways, hope that helps. If you have any questions about it, I'll be glad to try to explain it better so you understand it. But at the end of the day, the goal is for anyone seeing this, for this to help you to incorporate, to create your own trading systems. Because sure, you can copy this for exactly the way I'm doing it, but to be honest, you won't receive the same results I do. The reason why is because I created this based upon my fear and greed ratio on my own psychology. So what the goal needs to be for you is for you to try out and test your own trading styles and methodologies for your own self, because then you will fully trust it. If you just try to copy someone's trading style 100%, you'll never receive the same amount of benefits you will that they will, or the same amount of returns that they will receive for their trading styles. Because if they created it, then it's their own psychology they use to create it, so they understand the weaknesses, they understand the strengths of it, and it fits their trading psychology. Everyone's trading psychology is different, so it is good to learn different technical patterns, things like that, how other people trade and everything. But at the end of the day, incorporate and make them your own, and then you'll truly trust them, you truly understand them, and that will help you immensely when you battle the everyday battle between that all of us have between fear and greed. I mean, I still have every single day, every single trade I'm in. If someone lies and says that, oh, when I'm in trade I'm completely emotionless, I don't feel that tug of fear, I don't feel that tug of greed within me, they're a liar. They are completely lying. I've been day trading now live consistently since about 2018. Is definitely before COVID. I know that, maybe 19. So 4 years going on 5 years now. And even before that, I traded years, trading forex and other day trading stuff. But this is the longest I've ever been as far as consistently trading for it. And so that's my recommendation to you all. Learn as much you can, but the best thing you can do, rather than spending $5,000, $10,000, $20,000 learning from these gurus out there, create your own trading systems. Open up these small accounts, because you can trade these micro contracts, which is what I'm trading for, rather than just like a standard contract where the losses are a whole lot less and you can trade a whole lot more for it. So anyways, that's what I recommend. And if you have any questions, anything I can do to help you, let me know, because your trading style will probably be completely different than mine, and that's perfectly fine. All you want to do is make sure that whatever you're doing, you are making money, and that's all that matters. Doesn't matter how you trade, it's just that it doesn't make you money. So anyways, take care. Talk to you later. Bye.